first thing that comes to mind when you hear net worth? I know for most people, they probably first think of celebrities or really wealthy people. Perhaps you've even Googled other people's net worth in the past, but have you ever been curious about your own? Well, you definitely should be. When you track your net worth over time, you are forced to face where you are financially. This can give you the motivation to continue in the right direction or give you the wake-up call you've been desperately needing to get back on track. Either way, everyone has a net worth and should be aware of it. In this video, I will explain what net worth is, how to calculate your own, and ways to increase your net worth with some very simple steps. Sound good? If so, please give this video a thumbs up and let's dive in. To start, what is net worth? Net worth is your assets minus liabilities. That's it. You can think of your assets as what you own and your liabilities are what you owe. So simply put, net worth is what you own minus what you owe. Contrary to popular belief, net worth is not what your salary is or what kind of car you drive. And it definitely is not tied to if you wear designer clothes or wear expensive jewelry. I think sometimes we might look at someone who drives or wears fancy things and think, oh wow, they must be wealthy or have a high net worth. This couldn't be any more false. If you take nothing else away from this video, please understand this. Net worth is not derived from shiny things, and having a high net worth does not just look one certain way. If you agree with this, please comment your thoughts below. I'd love to see it. So how is net worth calculated? It's honestly pretty simple. You need to add up all of your assets and add up all of your liabilities, then subtract your total liabilities from your total assets. You can do this yourself on a piece of paper. Just draw a line straight down the middle, one side for assets and the other side for liabilities. Some things you could include on your asset side are the current market values of your home, investments like stocks or bonds, retirement accounts, vehicles, jewelry or precious metals, cash value of certain life insurance policies, and of course, cash. Basically, anything valuable that you own that can be converted to cash is going to be your assets. Make sure to be conservative with assets you're estimating, like your home and vehicle values. It might look better on paper, but doesn't necessarily accurately reflect your net worth. On the liability side, some things you might include are mortgages, auto loans, student loans, or credit card debt. Your liabilities are going to be any financial obligation you owe to someone else. Now, there are some things you should not include in your net worth. Those are things like rent or lease payments and most insurance policies. Anything that is purely an expense should not be included in your net worth. Once you have the totals of both your assets and liabilities, you now can calculate your net worth. For some, you may have a negative net worth, which is possible. You can have a negative or positive net worth. But don't worry, it's okay if you have a negative net worth. That doesn't make you a bad person or bad with money. It is good to be aware of this and to start moving your net worth towards a positive direction. Let's take an example, starting with assets. Let's say you own your home and it's worth $250,000. You have a car valued at $9,000. You also have some retirement savings at $16,000. And lastly, all balances in your accounts add up to $5,000. This gives you a total asset value of $280,000. Now, let's move on to liabilities. Let's say the house mortgage is $175,000. You have a car note and it's $6,000. Student loans, and that has an outstanding balance of $12,000, and you have some credit card balances totaling $3,000. Your total liabilities here would be $196,000. In this case, total net worth would be $84,000 or $280,000 minus $196,000. Make sense? So let's say you did calculate your net worth and it is in the negative or just not as high as you'd like. There are some steps you can take right now to increase your bottom line. And one way is by increasing your assets. You can do this by opening a retirement account and maxing out your contributions. Having a retirement account does two things to increase your net worth. One, they defer your taxable income, so less of your cash is going towards taxes, and having more cash increases your net worth. And two, because less cash is going to taxes and is going into a retirement account or asset account, you're increasing your overall asset value and net worth. Another way to increase your assets and ultimately your net worth is by having a side business or doing some freelance work, also known as a side hustle. Owning a business is considered an asset for net worth purposes. So if you do own your own business, be sure to include its value on the asset side of your net worth calculation. And if you don't have a business, consider starting one on the side to increase your cash flow. Now, you can also increase your net worth by reducing your liabilities. This is probably the simplest way to increase your net worth. Take inventory of all your outstanding debt and make some extra payments on them. It's wise to focus on the debts with the highest interest rates and pay off the lower interest rate debts along the way. Also consider consolidating or refinancing your debts at lower interest rates. This can help you pay off your debt faster. You can also increase your net worth by cutting your expenses. Now, I know this is much easier said than done, but may be a necessary step to boost your net worth. Analyze your monthly expenses and see if there are any that you can cut back on. A trick I like to think about when considering buying something that might be a splurge and not really necessary is asking myself, can I buy this item 5 times right now? And if the answer is no, you probably can't afford it and you shouldn't be buying it. And if the answer is yes, then great. Kudos to you. You probably still shouldn't buy it because it is not a need. The key here to remember is by not spending $1, you are accumulating $1 more towards your net worth. My last tip to increase your net worth is tracking it at least once a month. There's no way to know if your net worth is increasing or decreasing if you're not reviewing it regularly. There's actually apps you can use that will automatically track your net worth for you. But the process doesn't have to be complicated. You can literally do it on a piece of paper and compare it to the last time you calculated your net worth. If things are going in a positive direction, then great, keep doing what you're doing. If it is going in a negative direction, at least you're aware of it and can take corrective action. Something else I find interesting about net worth is the average net worth by age group. I found this chart on the Federal Reserve website and it is interesting to say the least. These numbers are in thousands, by the way. As you can see, all age groups under the age of 54 have lower average net worths now than they did just 30 years ago in 1989. Why do you think this is the case? I'd love to know your thoughts on this in the comments. I believe this is largely due to inflation. Not only has the cost of living today dramatically increased, but wages have not kept up with the rate of inflation. So things cost more, but you're not getting paid more. Student debt also has a lot to do with it. The average student loan debt in 1990 was just $6,700. The average student loan debt in 2020 was $37,000. That is a huge difference. And as we all know, student debt negatively affects net worth. Whatever the reason is, I want you to take the necessary steps to increase and build your net worth from wherever you are today. Well, that's all I have. I hope this was helpful for you. I'm Crystal with Life Accounting, and I'll see you in the next video.